It's been an interesting week, marked by record-setting momentum in gold and silver, backed by weak U.S. jobs data, tariff-driven volatility, and sky-high safe haven demand. Now, Senior Portfolio Manager Jaime Carrasco joined me on Mining Metrics this week to unpack what these market moves really signal. I started by asking him what he read into the U.S. job numbers.
The big issue with the employment number wasn't the employment number, it was the revisions going back. And we realized, hey, where are all the jobs? There were no jobs created, right? And Trump called the bluff. And I think that's important because I think people have to wake up to the reality that inflation is not 8.2% or whatever, 2.5 or whatever number they're calling us. Look at your bill. Look at how much people are, the erosion of the purchasing power of the money. That is happening, but the numbers, they're not telling us how much it is. Why is that? Because they started adjusting so CPI payments didn't increase with inflation. But now we're down the line 20 years and the aberration of that number is so big. Shadow statistic. I love John Williams because he's still calculating things the way they were done then. Yeah. Now, to me, I don't particularly care because that's just noise. That's the past. That's the machine that was making the car that was making that rattling noise, and people are finally paying attention. I've already bought the new car. That's why I like gold. I like the precious metals because it's part of the whole transformation of the monetary system that we're ongoing. I've been at this since 2015, right? Because I was looking at the numbers. I was looking at the underlying facade of things. Why? Because I'm from Chile, right? And coming from Chile, you learn to see that. Like look at what Milei is doing in Argentina. He's cleaning it up. But there was no difference between the Argentinian numbers over the years, or Cuba, or Venezuela, or right. So I think it's the bluff that Trump is calling that's the bigger issue. We're at almost 34.60 today. I think we're on our way, and I think that's inevitable because gold is re-entering the monetary system. Look at India. Look at the fight between India. Finally said, no, we're going to stick with the brakes because we need energy. We're not going to cut our energy consumption that we're getting from Russia. So they're standing alone, right? These countries are starting to stand alone, and that means though that they're not going to use the dollar because the problem is U.S. pressure. But by not using the dollar, what are they going to use? They're not going to use the rupee. They're not going to use the yuan. They're not going to use the ruble. They're going to use gold as trade settlement mechanism. That's already in place, by the way. That's already up and running through the M-Bridge that the Bank of International Settlements, the Bank of Banks, set up for China a while ago. And that's a blockchain commodity-backed trading platform as an alternative to the SWIFT. So it's funny because it's no longer ideas. These things are in place and ready to go. The question is who pulls the trigger. Yep. Scott Bessent, the new Treasury Secretary, upon inauguration said we're going to rebalance the asset side of the ledger in 12 months. That was January, February at some point. Well, we're down the clock now. So is it the U.S. that's going to pull the plug first, or is it going to be China? All I know is that whenever they revalue the asset side of the ledger, be it the U.S. or anybody else, those that don't have gold are going to lose out. Yeah. Right? Now, gold, yes, I do like gold. I do like gold at this price, but I started buying it at $1,500. What I would say to investors, forget about gold. Stick to the producers and stick to silver. Everybody, again, just like the little noise in the car that was breaking, nobody's paying attention to the fact that for the last 5 or 6 years, we have had demand deficits for silver. Right, where the global demand is just not being kept up by production because silver's a bimetal. It's coming out of copper mines, of lead mines, of zinc mines. We haven't been looking for silver mines, and those are in decline. Well, what's going to happen now is we still have that demand because of electricity, because of high tech. Yeah. Well, all of a sudden people are waking up. It's happening at Costco, and they're saying, wait a minute, why spend $3,400 US on an ounce of gold when I might as well buy silver for, well, close to 37 now. Yeah. I think we're going to be at 40 very quickly. Because Western wealth is 99% out of the sector. 99% of the money Call it smart money, call it whatever you want, but pension plans, Canadian pension plans are not sitting on the resource sector, never mind gold companies or silver companies. They're sitting in the US, and they want to kill the dollar. So all of a sudden, they're going to have a wake-up moment where they're going to have to say, well, we got to diversify, right? I know that in Brazil, they're investing in the economy. I know that in China, they're invested in their economies. I know India is investing in their economies. But Western wealth is chasing the Magnificent Seven. That's not money management to me.
Yep.
You know, money management is proper asset allocation diversification. And within that, at least 7% under normal time should be in gold or precious metals. It's 1% of Western wealth. That's an opportunity. Why? Because they're going to have to buy those securities I own.
Yeah.
And that's why I urge investors to really take a look there, because, you know, Agnico Eagle is the one that I follow the most. That's been one of my top picks. It was down at 50. Forget about Barrick. Barrick still hasn't broken through this 2020 high. Barrick was at the lowest 50. Here we are sitting at 185. I don't think we're going to face nationalization or expropriation of gold. First of all, nobody owns gold, so who's going to expropriate it? Are you going to go expropriate it from the Chinese central bank? No. What's going to happen, though, what's happening is the hard lesson that Chile learned was that nationalization, and Venezuela of late, nationalization, all it does is it stops capital. So there is no production going on. And that hurts the economy more. What I find that's interesting is that it's a really good balance between capital. You got to get, and that's what Mali communicated to Barrick, that, well, we need the production, so you guys have the expertise, so do come in. But they're looking for a better balance between capital and labor, capital and the countries. And that's what Chile has. That's what Chile found, and that's where Latin America is heading. And that's why I'm very bullish Latin America. That's why I like Brazil. I love what's happening in Argentina, because what's happening in Argentina is not the balance between capital and labor. It's the annulment of government bureaucracy, which to me is a real problem.